Hi, friends. It is I, Investment Pro host Eric. And you might say, Eric, are you really an investment pro? And I'd say, well, no, I'm not. But I've long had opinions about investments without actually having any money really to invest or particular interest in investing. Now, in other words, I've had interest in investing as a topic, but not as a hobby or activity. I currently have recently made my first investment, actually, that you would qualify as such, really, uh, into crypto, and we're talking a small amount of money. So, compared to people who invest a lot of money, I guess. Regardless, it's irrelevant to me in terms of, like, how much expertise I have about investing from experience. I think I understand very clearly why one should invest in crypto right now. Obviously, one should have invested a long time ago, but if you haven't done it yet, then you should do it now. Because it's why you should still do it now. Why it's not too late, whatever. There's some very good reasons why investment in crypto right now is a good idea. Some cryptos. Number one, institutional factors. So there was this long stretch time in crypto where you had to go to a lot of trouble to actually make a transaction where you got crypto. You had to get a digital wallet of some sort, and it was kind of a hassle, right? Um, Also, in the beginning, cryptocurrency was explicitly pitched as a currency. It became a commodity fairly quickly, but only some portion of the population understood it as a commodity uh, at the beginning. And so that's one of the other reasons why institutions didn't know what to do with it. If it was, in fact, a competing currency against the fiat currency, then the government would presumably say, we invoke the law of the land that says the only legal tender in the United States is U.S. money, not anything else. But in the end, it turned out to be functionally a commodity, not a currency. So that makes it a lot more easy for existing institutional factors to incorporate it into the existing model. And see, government and banking tie-ins have begun to take place with cryptocurrency, and those are a necessary precondition of something being ultimately a reliably safe enough investment to call a good investment. You know, not just a a good long shot or something, but a good, very sound investment. I think. Uh, so number two is value factors. Why is it that cryptocurrency has value at all? After all, it's just digital whatever. The answer is number one, cryptocurrency is a way of putting money someplace. It's a way to hedge your existing investments. It has a higher ceiling and risk than does than do most stocks, most conventional stocks, and the higher ceiling and risk scales, which is to say, the cheaper the crypto, the greater the possible uh, benefit. In other words, you could increase your money by a lot, but the greater the risk that it never actually goes up really at all. So there's a lot of cryptos now, and there's not. They each might proclaim some specific reason why you ought to choose them as preferable. They may have some features or whatever, but the core factor in value seems to be arrival at the party order. So Bitcoin is way by far the most valuable one, and Litecoin, which is the second introduced coin, is uh, among the top there, and Ethereum, which is like the third kind of big one that tried to say we're not just a crypto, we're a frame for cryptos. In other words, we're like We're like a platform that spews cryptos left and right, so to speak, that all uses the same engine, or an engine upon which you put different crypto skins, basically, or something like that. So and then there's one called Bitcoin Cash. These are the ones that PayPal sells, and this is where I invested and why I invested. The only reason I really invested in crypto is because I already use PayPal regularly, and one day it said, you can now buy crypto here. And that's a really important reason why it has value. Not only why it has value, but why now is a good time to do it. But because when you make it available easy for the average consumer to invest, even those who aren't investment minded in terms of doing, just in terms of thinking about it or sort of finding it interesting, then you're naturally going to have a lot more money going into the thing. What creates the value or increases the value of a given currency or given commodity is the amount of money people pay for it. So if there's more and more people wanting to buy a thing, then obviously the price of it goes up, and because the amount of it goes up at a predictable rate, and the demand for it outpaces the supply of it, right? You could mine it, but most people don't mine things like that. And I don't know exactly if all cryptos are mineable or not, but the point is people have treated it like a commodity that's already to trade rather than like a commodity you dig out of the ground. It also has value inherently as a currency contingency. So everybody could imagine a scenario in which the fiat currency of the United States dollar or whatever country you live in, where it collapses for some reason. And if you have some of your money in crypto, then presumably the crypto would not only not collapse, but probably shoot upward in response to the collapse of the currency, which is a good way to hedge your wealth by maintaining two different kinds of currency, just in case one of them were to collapse. Now, it seems to most people, as a general rule, that they're at no point are they worried about the dollar suddenly collapsing, and they're much more worried about a cryptocurrency suddenly collapsing. So that might not seem like a huge factor, but I think it's a factor nevertheless, because not everybody thinks that way. C, foundational value. The foundational value in it is basically that new wealth is generated anytime there's provision of useful attention. It expresses via two mechanisms. One is beholdens, which is if I do something useful to help you, then you owe me one. But instead of owing me one, you just give me money, right? Money is a fungible, tangible symbol of beholdens that we hand to each other. Or by a direct acquisition. So if you have a resource that has inherent value, such as a foodstuff, or value because it works well as a kind of currency, like gold or silver, and to be a good currency, you need to be easily fungible, easily divisible, and you need to be uncounterfeitable. So gold and silver have two of those going in spades, which is, as long as the gold and silver are equally pure, the fungibility is fine. 1 ounce of gold, the other ounce of gold, they're both equally pure, it doesn't matter which one you have. As far as uncounterfeitability is perfect, can't be counterfeited. But as far as divisibility, it's better than other metals for divisibility. It's because it's softer. And it probably seemed at the time like the ideal because it's soft enough that you can divide it and make it little coins without that much work, but it's still a metal, so it doesn't fall apart, you know? Anyway, a little bit of a sidetrack there. So, look, direct acquisition then would be something like going out and actually getting gold from the land or some other resource that has explicit concrete value for utility purposes, such as gold's valuable for different reasons than oil's valuable. Oil's valuable because we use it for lots of different things, and so there's a constant supply. It's always some form of, we use it to produce energy, obviously, all the time. That's one thing we use it for, but we use that energy for lots of different things. So we need a lot of that oil, and as a consequence, we can sort of make bets on the the race between the suppliers and the demanders as to whether there's more oil than they know what to do with and they got to get rid of it, or whether they're trying to get it out of the ground fast enough because people are buying it out of their store like hot cakes on a cold day. Why am I explaining all of this whole extra stuff? I don't know. Where did I get stuck? Number 2, delegation. Right. So delegation of attention to computers equals mining, quote unquote. The delegation of the attention of your computers to mining cryptocurrency mimics the acquisition mechanism of new wealth generation, articulated above, but it produces a resource that has predictable scarcity. That is to say, you know how scarce it is now, and that it's going to get more scarce over time as it's a finite amount of imaginary mia that you can pull out of the imaginary ground. It has infinitely divisible fungibility. So I have currently, I own like, 0.0012222.1. Like, it's got a bunch of decimal points right after it of Bitcoin, which is like $110 worth or something. I've invested my initial investment, which I did over the course of a couple of days, was including all the fees to purchase it was $1,360. Without the fees, it was $1,300. So I paid $60 in fees for $1,300. That's a fairly high amount of fees, right? But what it means is you just have to your $1,300 worth of whatever that you paid $1,360 for needs to increase in value sufficiently over $1,360 to also account for the fees on the outgoing end. So call it $1,420. So I've got something then that I have is worth $1,300 that until it gets over $1,420, I'm losing money on it. If it gets over $1,420, I'm making money on it, assuming $60 fees on the other end. Now, I'm not sure that that's the actual number of fees, because it seemed like there was $9 fees per $500, and I got $1,300 worth of stuff, but I don't know why I concluded at some point I had $1,360 into it. $9.18 and another $3. It's like $21 fees. So call it $13.21 I have into it. I don't know. It's $9 for $500. But I guess I was probably just counting it the other way as well. I'm assuming there's $9 per $500 the other way. So when you sell it, you have to also pay that. So factoring all that in, I figured that my initial investment of $1,300 plus fees to be worth, I guess, taking the profits would have to get up to about $2,000 or something, and then I'm not sure if you want to take the profits or not. However, I'll probably have to cash that out to pay for part of my dental work at some point here pretty soon, and by which I mean the next couple of months. The thing is, or I might not. It may very well be that by the time I have to pay for it, I've got sufficient other revenues. If I had to pay for it right now, I'd have to cash some of that out. Anyway, right now it's gone. Since I put it in there, it's gone. It's gone up. It's gone down. It was up to $1,600 at one point. It's now down to. It was down to like $1,200 at one point, or $1,180 or something like that. Now it's back up to $1,500. Almost all of the volatility on the down end was Bitcoin Cash, which is the last one I bought and the one that I had the least faith in, and that I bought for a different reason. The reason I bought Bitcoin Cash is because I looked at the chart of the ups and downsy thing, and what it showed is a high way up here, a low down here, and a just above zero for the year. And And I'm like, well, things tend to creep up back up to their highs, I guess. I'm going to assume that's going to head up back up to its high. But so I bought $500 worth of it, and then it dove. Meanwhile, the ones that I bought for other reasons, like the first one I bought was Litecoin, and my reasoning for it was it's the second one that came out, and compared against the first one that came out, which is going to have the highest value, which is Bitcoin, and the second one, there's too big of a gap. Litecoin is going to close the gap before it stops appreciating, and this is the best one to buy, and that's what I should buy. So I bought it, and it performed basically as I predicted so far, which is it's steadily gone up, and I think it still has a higher ceiling. I think for the same reason I articulated there. Then the next one I got was Bitcoin, because I figured it's the most reliable, but the slowest growing, and it too has performed as I anticipated so far in the month or so that I've had these. The third one I got was Ethereum because I just thought, well, I was successful the first 2 times. Why don't I try this third one? Maybe it's good too. I don't have as much faith in it, but at least it has a distinct aspect to it that makes it have some claim to being superior in some way to the other ones that people might attribute value to. And whether or not that is actually valuable is kind of irrelevant if people attribute value to it. So, at least right now, because there's a timing issue too. So, the one I didn't believe in and was skeptical of it right from the get-go was Bitcoin Cash. Because Bitcoin Cash claims to be... You know what Litecoin did when they fixed Bitcoin? Okay, now we've fixed Bitcoin too. But we didn't fix Bitcoin, we made a new thing called the Bitcoin Cash. So it's like, I'm not buying their shuck and jive in some sense, right? And again, it's about how individuals perceive value. So, but just because I was wrong about that initially, it doesn't mean I will prove to have been wrong about it long term, to have bought it. It may turn out to be not a bad idea after all. But I will say this, that that the dive that it took after getting above zero for the year kind of makes a lot of sense, because people bought it back here. They saw their potential profit way up here. They held it. It dropped way down here. And then here to enough profit to justify, okay, at least I got this much profit out of it. They sell it and it drops. Oh, I bought it right there, you know. However, it has gone back up and recovered most of the value that it's lost. And so I'm guessing that was a correction, or whatever you want to call it, or a profit-taking flurry from people who had weathered the storm. Now that they were out in calm weather again, they're just like, okay, all right, I'm above even. Let me just take my profits and go. I don't want to go through another storm like that. That was horrible. So it's like, that's probably what happened, is my storytelling about it anyway. Who knows? Okay, next. So one of the reasons why crypto does have an inherent value is because it works so well as a currency, whether it's used as one or not. It has predictable scarcity, divisible fungibility, and reliable scarcity. Yet it stays it's uncounterfeitable. Now, if it proves that it can be at some point counterfeited, then it loses all of its value. Because counterfeiting it at all is counterfeiting it completely. Last area of discussion here is timing. So just as I bought it when it came out on PayPal, I cannot possibly be the only one who's like that. It was lazy, basically, but not stupid. And also, I've seen ads on TV now. I just saw like the first one for like those trading sites for stocks or whatever. They're also trading in crypto now. So that means more and more people are going to be putting money in crypto. Why? Because a lot of people are thinking, like I'm thinking, hey, this is weathered the initial storm of proof of concept. In other words, it's been years now, and Bitcoin still has shit tons of value. In fact, it's got more value than it's ever had before. And, if it were just some sort of fake thing that had no inherent value, then it would have collapsed by now, is basically the thinking. But when you've got TV ads encouraging people to invest in something, then the companies that are using those TV ads to encourage people to invest in crypto are making money off of the fees. So there's plenty of incentive for them to encourage people to invest more money in crypto, especially if the fees are higher. And when encouraged to do things, people tend to do things. That's why advertising works, right? The more money that's invested in crypto, the higher the value of crypto goes up. The higher the value of crypto goes up, the more money gets invested in crypto, and the more legitimate it becomes. Now, you might say, as some people have to me, that at the end of the day, it will all prove to be a giant pyramid scheme, and the whole thing will collapse, and nothing will be worth anything at all. I mean, that's where you have to have some understanding of what wealth is to agree with me on this. That's similar to my understanding of what wealth is, which is I see wealth as a metaphysical quality first. People create wealth by creating a sense of obligation in others because they've done something useful for them. That wealth then gets expressed in its sort of most primitive form as then they do a comparable favor for you. But money is how we render that quality into a tangible, fungible, scarce form so that we can, so we don't have to keep track of owing a bunch of people favors all the time, right? So because it's like that, wealth is backwards of everything else, pretty much. Usually you have a symbol, like words or a token or whatever, to represent a physical, actual thing. In this case, the real thing is the non-physical thing, and the symbol is the physical thing, right? Like, the word dog is not the physical dog. The physical money is not the actual wealth. And we know that because a lot of times we make purchases without ever touching a piece of currency at all. We just transfer numbers through by the bank, right? So it's a weird thing to understand. And the third reason why now is a good time is COVID. People are looking for alternative economic opportunities given the destruction of the economy by all this COVID stuff. So this is one such promising, appearing at least, route. Hey, maybe this is the new gold rush. Makes it the actual new gold rush for at least a year or so. You know, is it going to be a great investment forever? I don't know. I'm not making that claim. Let me put it this way. I'm not making that claim. The claim I'm making is that some crypto, at least probably I'm advocating specifically Litecoin, is the most primed to still have a lot of profit room. Like between now and its ceiling, there's still a lot of room. And also be safe. For the next year or so, I would guess Litecoin will continue to climb in value. And I would advise people, as my professional advice as a professional investment advisor giving person, as a hobby. That's my hobby, I want to stress. My hobby is being a professional investment advice giving person. I don't actually have any professional experience in this at all. I have no license, except for the license from all licenses all the time, which affords me the opportunity to do this, but I've got no official papers or anything about this. So if you invest in your money in what I'm suggesting for the reasons I'm saying you lose your money, don't blame me. Because I am making an argument here as to why it's a good idea. I am leaving it up to you to decide if these arguments are convincing enough to convince you to invest in the thing. Okay? And no guarantees when you invest in speculative shit, right? My argument is, if you're going to invest in speculative shit at all, this is a good choice. If I prove to be wrong, well, I guess you won't listen to Eric after that. But I wouldn't put this video if I didn't have a very high level of confidence that what I'm saying here is correct. If you invest in Litecoin right now and hold it for 1 year, you will at least double your money.